Good morning, everybody. Thank you for joining us today for our NHORA Lender Panel. My name is Jorge Gonzalez. I am your 2026 NHORA Monterey County President. Thank you. Well, appreciate your support. You know, we definitely wanted to give back to our 2026 annual sponsors, Bank of America, Model Mortgage, and Wells Fargo. So we did decide to do this lender panel so they're able to give you information on products and services that they offer. We do have Michelle Perry, who is going to be our moderator. She is our 2026 NHORA National President.
Hello, good morning, everybody. I'm glad to see that you all fierce the rain this morning to be here. Many of you are from here. I actually am in Hollister, San Juan Bautista area, and of course I want to be here to support this lovely chapter because they have done so well. Thank you, Miguel. Thank you, Jorge, for stepping up, and thank you for all being here. So I am going to be the moderator today. Thank you for inviting me to do so, and I'm going to call these wonderful people. And first, I'm great friends with all of them, and they've all served with NHORA, and I've known them for years, so they're all amazing lenders in their capacity. So, Gloria, Perez. And I think what I'm going to do is I'm going to call them all up here so that way they sit up here, and then I'm going to read a little bit about each one of them. Eddie. And Miguel, Santamaria. I just thought everybody knows something. So go ahead and have a seat. Gloria is a local community mortgage lender with Bank of America. Gloria has 6 years of experience. Gloria takes pride in helping first-time homebuyers and those using VA and FHA loans feel confident about every step of the way. Building relationships and supporting her community is at the heart of what she does. When she is not working, you'll usually find her exploring new places and making memories with her family. And her 2-year-old. Eddie Martinez, private mortgage banker at Wells Fargo, bringing over a decade of experience helping clients build wealth through strategic mortgage and banking solutions. He partners across wealth management, business banking, and commercial banking to design comprehensive financial strategies for high net worth individuals, and has managed portfolios exceeding $100 million in assets. He is deeply committed to community engagement and has spent the past 4 years supporting local NHORA chapters. Eddie holds FINRA Series 663 and SIE licenses, along with a life-only agent certification. When he's not helping clients achieve their homeownership and financial goals, you'll likely find him brewing beer, traveling, or spending time with his family and energetic Shiba Inu. Did I say that? Miguel Santamaria has been a trusted mortgage professional since 2005 and is the branch operations manager at Model Mortgage Reserve in Salinas. With more than 2 decades of experience, he has helped hundreds of families navigate the path of homeownership and build long-term wealth through real estate. He is the founding president of the National Hispanic Organization of Real Estate Associates, Monterey County chapter, and is known for his leadership and straightforward lending approach, empowering first-time homebuyers and move-up buyers to make confident financial decisions and investments. Let's hear it for these guys here. Miguel, at what stage should a serious buyer move beyond a basic pre-qualification, and how does a fully underwritten approval strengthen an offer?
Hey everybody, welcome. I always recommend for all applicants to get fully underwritten pretty much on my first interview. This avoids a lot of unnecessary headaches. I could get you a full underwriting approval between 2 hours or 30 minutes sometimes if you give me all the documents. I have bunch of different lenders for different products, so I always recommend to get a fully underwritten approval, a loan commitment letter. So you're not wasting your time opening doors for clients that can necessarily afford it. You don't want to do that, right? I know you guys are always suffering with your super things and your connections and your laptops and all of that, so don't spend time on that. Get an actual commitment letter where you know for a fact income has been reviewed, credit has been reviewed, and assets have been totally reviewed. That's what I always recommend. No, and the magic is this could be a TBD, to be determined. You don't necessarily have to need, you don't need a subject property yet, but yeah, it's open. Yes.
Hi everyone, good morning. Kind of just piggybacking off of what Miguel said. During our first interview, as we're doing the loan estimate and all the good stuff, I strongly suggest for pre-approval as well, just because it does eliminate a lot of the headaches and it does make it a much easier process for the buyer. As opposed to a pre-qualification, it's just saying that yes, the bank may lend on that amount, but it's not fully underwritten. We haven't seen, the full financial scope, like we haven't seen, their full statement, so we can't guarantee that that can be done. So, a pre-approval is always, for me, and I know for most of us, it would probably be the best way to go, because it's also easier with the relationship with realtor-lender, because at that point, it's like, the loan's already approved, we just need to get the property in contract and allow everything else to kind of just fall into place.
So these guys pretty much recapped it, but I mean, what I always recommend is all my clients do get fully underwritten, not just pre-approved. It's nice because we can actually get the process started with these soft credit checks, so that it's going to cost them just their time to get everything up front. The way I always put it out to my clients is, hey, you get all the documents up front, it really allows us to go ahead and go to the decision makers, the underwriters. So either approve or unfortunately deny the loan, right? And then that way there's no ands, ifs, or buts, and then we pretty much get that approval up front, and we can go ahead and write a more aggressive offer. And then you can write or check off that box on the on the contract, showing that they're fully underwritten. So just takes the mystery out of it and allows us to close a lot quicker with more confidence.
Okay, I'm going to give this one to you next, Eddie. So this is probably my favorite one that's on this list because it affects me too. And I might change it up a little bit. So what specific communication habits between lender and agent create smoother escrows, and how do you prioritize that communication?
Absolutely. So with the client's consent, of course, then we can go ahead and share information with the realtors. You got to know what the left hand's doing, what the right hand's doing. That way you can kind of have that strong partnership. And then I'd love to, once I get that authorization and also get the client fully underwritten, love to reach out to listing agents just to brag about our clients and let them know the strengths of the file. Because I think that really helps on both sides. That way the buyer's agent knows, and maybe you can cut a couple of days off to see it, the close of escrow, or just knowing that there's a real person on the other side for the listing agent as well, and knowing that I'm not somewhere in Kansas. No shade to my colleagues in different states, but it always does help having that local link.
I think that it's very important to have a strong communication between lender and realtor, just because it does make it a lot easier. And I kind of had to learn this the hard way. I kind of maybe would shy away at the beginning when I first started. If I didn't have any updates or if I didn't have good news, it's kind of like, okay, I would kind of try to brainstorm at first to see how can we come up with a solution, as opposed to just, saying it how it is. Do that now. Because it did take trial and error, so it is very important to, even when you have no update, just give them a quick call, hey, I really don't have much going on, but just wanted to keep you in the loop. And that way, everybody always is informed as to what's going on with the file.
Okay, I have to say that one of my business coaches told me when I was starting my career, and it was, if your business partner is asking you for an update, then you're not doing your job, right? And if someone asks me, hey Miguel, when was the appraisal order? Then I failed. I didn't tell you, hey, as I placed the order for the appraisal yesterday, the listing agent is the point of contact, right? So I take communication as hard because I always put myself on the other side of the equation. I know in real estate and lending, silence creates panic, right? And there's no need for panic. Also, if something goes sideways, my partners are the first ones to know, hey, something happened with the income, or the client just got let go, or I got a new credit report and there's a new liability. They always have to know. I believe in over communication.
Gloria, your turn. What are the most common underwriting issues you're seeing derail transactions right now? And how can they be identified before an offer is submitted?
What I've seen so far, the trend, especially in our community here in Salinas, is a lot of cash deposits that are unsourced. So, and I think that we as lenders maybe could do a better job if we're not already at really inspecting the statements that our clients are submitting, because a lot of the times we can kind of pinpoint, like, you know, if the underwriter is going to question something that's on there. So we can go ahead and jump ahead of it and see, okay, if we know that our underwriter is going to request for a letter of explanation for expensive deposit or all these transactions, let the client know ahead of time that these are going to be requirements, that this is going to be expected, so that when you do ask for it, if you haven't already, they're not surprised as to why is it so hard? Why are they asking for all this up front now when, you know, somebody might have said you only need to submit these documents, which hindsight, yes, but there's a lot more that goes to it than just submitting your income statements or income documents. It's like they look at everything. Underwriting will look at everything to make sure that they can lend to the specific individual.
Just to piggyback, do you guys, do you have like a letter that you give to the client at the time of meeting that has all the don'ts, like don't go buy a car, like don't put cash in your bank account, like don't, any like don'ts that you do?
I don't have a letter, but I verbally advise them to not do any of these things. So it's like anything. It's like, do you have any travel plans? Are you planning to, like, what are your goals with home buying, and what goals do you have outside of that that might affect your transaction? So simple, like don't apply for any credit, don't go buy a car, don't go buy furniture. If you're going to be putting it on credit, and if you want to go ahead and buy it, but it's not, if it's going to be taking out of your usable assets, then just hold off until you're done with your transaction, and then, you know, do whatever it is that you were planning to do. So yeah, there is the list of don'ts. I don't have it in writing. I will just let them know, like, hey, this is what you're going to do, so that you're not taken by surprise when you get questioned later on a certain transaction.
I think in our area, more than anything is assets. El Chapo nos tiene traumados a todos, right? When I meet with my clients at the beginning, it's like, oh, I have them at home. I'm like, we could switch mattresses if you have them to the mattresses, right? The amount of customers that have cash at home is humongous. That's number one. Number two, we all know, we're all business owners. On your taxes, sometimes you could make $1 million and then on the net you're negative, and then you ask why you don't qualify, right? So little things like that, assets and credit, undisclosed credit. It's always funny when they're like, oh, but that's not my car, someone else is paying for it. Is that a joint account? No, but that's fine, you could ignore it. I'm not paying for it, right? There's liabilities that we could ignore as long as we have proof that someone else is making the payments. But it gets more tricky or complicated when we don't even have that. When they pay cash and it's like, okay, how am I supposed to admit this liability? But they're paying cash, I need proof. I always say, El Chapo nos tiene traumados a todos. So money.
Those are really great points that my colleagues here brought up. Yeah, so no vacations. Please don't go buy any trucks or any cars or anything, or the furniture before you get the house and the keys. And of course, yeah, no big deposits and things of that nature, right? And especially, the last couple of years when some of the banking got kind of loopy, to say the least, right? With some banks potentially going under and some that did. A lot of folks did pull out cash. But the number one thing that I think that just chokes up the process with us, and I was actually talking to somebody earlier before this, was just insurance. That's a big thing. I mean, it's a big elephant in the room. California, Florida, those are two states right now that are having issues getting insurance. So if you're doing, let's say, single family, you know that it's in a questionable area where there's some shrubbery or some trees or some forestry, get your insurance up front. We don't want any surprises because that could kill the deal. I do business with a lot of townhomes, a lot of condos. So we're getting into hot water as well with the HOH not being warrantable. So we got to make sure, do our due diligence to see why. If it's something that's to do with structural issues, then we're going to pull out. If it's potentially litigation, you got to just uncover and see what's going on. On the flip side, we can always pre-approve a specific HOA or association to see if it meets our guidelines. And then that way we can go ahead and close on it a lot quicker. But please, please, please pull quotes for insurance before you even put an offer in. That way there's no surprises for a $10,000 or $15,000 insurance plan that the client wasn't expecting. So I think that's the biggest thing. Just do your due diligence up front, and I'll definitely smooth the process on the back end. So day one, please send me that insurance quote.
What outdated belief about mortgage financing do you still hear from agents? Even we hear that stuff, so here you go.
Even till now, it baffles me when they say, "You got appraised, sir? They didn't give me the value." It's like, agents, we don't control the appraisal panels, okay? We call appraisal management companies. So the same appraisers work for everyone. The same appraisers would work for Bank of America, Wells Fargo, an independent mortgage broker. So we don't pick and choose for safety and security purposes for the buyers.
I didn't miss about
That's another thing. If the property has unpermitted or undisclosed bedrooms, bathrooms, and garages and all of that, that's something that's out of my control too. So if you want the value for it, there has to be a permit for it. Simple like that. And really important, like I was saying before, for self-employed borrowers, if they do have, if they claim, again, $1 million as net, we have to go with whatever they show at the bottom page. So please, right now this is the right time for us to speak with them and tell them, if you want to buy a house, let's meet before. I never give tax advices because I'm not a CPA, but I can tell them where they are. Yeah. And another thing, sometimes they say, hey, how much money do I need to make to qualify for this home, right? And it's like, each scenario is different, depending on debt, depending on down payment, depending on a lot of other factors.
I don't know about from agents, well, besides the appraisal and stuff and underwriting, that's stuff that's really out of our control, and there's not much that we can do besides try to keep an open line of communication, but yeah, we don't control appraisal values. We can always submit for reconsideration of value, that we can do. And also the timeline, especially, I don't know, I can't speak on Eddie's behalf, but I know with us, since we are a bigger bank, there is timing delays a lot of the times. And it's, I can go and, ping and email underwriters and underwriter managers all day long. But sometimes they just will not get back to me depending on how big their pipeline is. And there's nothing that I can do about it. If I could, I would go in there and approve the loan myself, if I know that it is approvable. But there's just things that I can't control that I can do. Same thing with the buyers. If they come and ask, well, I make this amount of money, or how much do I need to qualify for this? Like just like Miguel said, every scenario is different, and I can't sit there and say you need to make $100,000 to be able to qualify for this because I don't know what their credit profile looks like. I don't know what debt they have. I don't know the amount what their assets look like either, and I don't know at that point the amount of down payment that they're comfortable putting towards their purchase. So it really is going to depend a lot on, one, their ultimate goal and what it is that they want to afford. That will be kind of, see what we can do and try to help them as best as we can.
It's really great points. I think the biggest thing that comes to mind, since I've been on this side for a while here, is that big banks take forever to close. And they had a father that had somebody who did a loan at a big bank, and it took 45 days, or 90 days to close. I mean, on average, my closings are between 18 to 21 days. The sooner the better. That way, there's the less for my underwriters to nitpick at, and that really starts with you guys helping us really get dockets and get what we need up front so we get clients underwritten. I think that's the biggest thing. I think the other thing too, that's kind of more specific to this area, is that we can use other sources of income to qualify. So if somebody, let's say, has a W-2 job and gets bonuses, commission, overtime, or restricted stock units, we can use that and add it back in as quote-unquote variable income to help somebody maybe qualify for a little bit more. I have a deal right now where a client just retired and decided to buy a property now, which we would have met 6 months ago, would have been a lot easier. But we use other sources of income such as assets, retirement accounts, 401ks, IRAs, to kind of supplement that quote-unquote income and help them qualify. So that's, I think, another big myth that people don't really know about. Oh no, this person's retired, they're not going to qualify to purchase property. There's different things we can use to add back in to make the debt-to-income ratios work out.
So this one is kind of like what you had talked about regarding taxes, and I'd like to know about this one too. So for self-employed clients, what financial documentation should be reviewed early to avoid surprises later? And you mentioned like they don't show much income, right? Can a self-employed person get a loan with 1 year of tax returns? And if so, what does that look like? What do they need?
Let's be a little bit more cookie cutter, but yeah, if somebody's been in business for 5 years or more, then we can get away with 1 year worth of tax returns, but we do need full tax returns, personal and business for the most part. But it's on a case-by-case basis, and we like to meet clients early on in the year when they have their drafts, that we can at least take a look, let them know where they potentially may stand, and now they can go back to your CPA, come up with a game plan to potentially pay more in taxes, and then maybe show more income if that's the best course of action, or potentially get a go borrow. So there's strong income, strong credit, and no debts.
Yeah, same. With us, I know for a fact, like I can't really speak on any other type of loans, but for small business owners, at least with us, we do require upfront 2 years personal and business taxes. And I have had situations where, it's like they do make quite a bit of money, but, for tax purposes, because they don't want to pay a lot, they end up writing off a lot of items, and then they're negative, or they only report like the next amount. They're not going to qualify for their $1 million home that we want. So it's really important that we can't advise them on what to do because we're not CPAs, but let them know, hey, look, you're writing off a lot of items that are they really business expenses? Schedule an appointment with your tax advisor, ask them all the tax questions, because legally we can't advise on that, but we can see it. We see it on paper. We can verbally tell them, hey, like this is, where you're lacking, for lack of a better word. So just make it very important. Or once, depending on how soon they want to buy off. So maybe somebody's not ready. They just want to know what they need to do to get there. Let them know, hey, okay, you have 1 year of tax returns. Your following year, this is when you're really going to have to show your profit on your business, because as of right now, like with small business owners, if they're writing off everything, most of the times they're not lendable because they don't have enough income to show that they can actually afford this new property.
Self-employed borrowers are my favorite. For them, I never say no. I tell them how, right? One of the advantages of working out of brokerage is that we have access to a lot of out-of-the-box type loans, products. We could lend for clients with a 1099. We could lend clients with a P&L only. We could lend clients with bank statements. We could lend clients for every little single product that you think a self-employed borrower could have. We could offer that. So obviously the tax returns are always, you could get a better rate if you bring your tax returns and you qualify full dog. But also we have options, like I said, with a 1099 P&L only. You just need a profit and loss from your CPA and we're good to go. Yes?
How do you prove that they've been in business for 5 years?
You could even do it directly from the Secretary of State website. Google's our best friend as well. Business license from the cities. Yep.
What was the question? We didn't hear the question.
The question was for self-employed borrowers.
How do you prove they've been in business?
How can we prove that self-employed borrowers have been in business? Yes. And obviously tax returns as well. Yes.
Do you Does Wells Fargo offer temporary or permanent buy-down structures, and how are they being used strategically in today's market?
Yes, we don't have any temporary, unfortunately, buy downs, but I mean, in this market, we are seeing a lot of folks are asking for credits up front when they put in their offers, and that could be used to buy down the rate permanently. So that's something we've been able to do. On top of that, I was kind of waiting to say this a little bit later down the road. We have different grants and credits we can apply on top of whatever credits they get from the sellers. And most of the time, this really depends on how the deal is structured. You get up to 6% back in concessions from the sellers. That could help somebody get down to a very favorable, comfortable rate, which at the same time can help them potentially purchase a little bit more and help their debt to income ratios.
Exactly what Eddie said. Yeah, we don't offer temporary rate buy downs, but we can buy down the rate. So if a seller is giving the buyer some closing credit or some money towards their closing costs, the closing costs are already going to be there. A lot of the times what we can do is use that amount to buy the rate down to a much lower rate, which would, like I said, permanently buy down the rate.
I do offer rate buy downs. We have a 3-2-1, a 2-1, and a 1. So yes. And also, a rate buy down is a strategy, right, for the buyers. Let's be honest, nowadays affordability is a huge, sometimes stopper for the new buyers, especially the first-time home buyers. So once we tell them, hey, this is a 30-year fix, but on the first year, your payment could come down to like this percentage, they get excited. Then the second year is going to be this rate, and the third year is going to be this rate. And guess what? They don't even pay for it. The seller pays for it, right? So all of these factors help my buyers feel more confident, and also knowing that for the first 2 years they can save money on their monthly payments. So yeah, it is available.
And they have to qualify based on the actual rate. They have to qualify based on the actual rate.
Yes, for underwriting purposes, they have to qualify with a fully with a no rate. Yes, but you know, as a buyer, when you know that for the first year you can save a couple of hundred, sometimes $1,000 a month, it is a win.
When a borrower is near qualifying limits, credit, income, or DTI, what legitimate structuring options may be available?
I think education is probably the biggest piece when they're closer to their DTI limits. Specifically what I like to do is educate the client on what the whole process looks like, what it means for them as well, and then seeing where they're at. It's like, okay, we now have their full credit picture. We can see, you know, where it is, what debts they may need to pay off a little bit more, or if they need to add a little bit more, you know, if they need to save a little bit more. It's kind of like, at that point, if I know that they're maybe not ready, unless they specifically want to say that they want a pre-approval, just hold off on it for a little bit, just so that your pre-approval does not expire. So I guess in terms of structuring, you know, that's what we can do. Just work with the client to make sure that they are ready to get in there, and then move forward.
That's a great point. I think the biggest thing would be definitely just leveraging the tools that we have. We have, like I mentioned, a grant that can help, you know, reduce the cash flows for a client, essentially using a buy down to bring down that rate to also help massage your debt to income ratios, or even, you know, adding if need be a co-borrow, like I mentioned, strong income, low debts, and strong credit, right? That can definitely help us if we're already in contract. If we're not in contract yet, we're just having a kind of a baseline. I'm more than happy to run numbers for clients with that soft credit check and take a look and see, hey, you may have to pay this down, you may have to, you know, pay that off. Or if, you know, somebody's making payments on this, but it seems to be cash, let's go ahead and start getting those 12 months worth of payments, right? So just kind of get the baseline. It's never really a no, it's more of a not now. Come with the game plan and get those clients right.
So grants that you have, the 6% you talked about, can that be used towards down payment or?
Yeah, so 6% is more of a seller concession. That's the max that we can typically get depending on how the deal is structured. But the grant that we have is a $10,000 grant that can be used towards down payment. On top of that, have a closing cost credit that's up to $5,000, and that could be used for buying down points and just any other fees that they may and have our closing costs associated.
And that grant is only good for certain areas?
Yeah, so this grant's actually specific to Santamaria County, Monterey County, San Diego County, other areas. So as long as the property that the person's looking to buy qualifies for that grant, they can take the grant with them. Or if they're departing rents, even if the renting qualifies for that in a low to moderate income area, they can take $10,000 with them. Don't have to be a first-time home buyer, and doesn't have to be paid back. So essentially, it's quote unquote free money. I'll talk about it a little bit more in the next question.
The easy approach would be obviously going over the monthly liabilities. There's not much we can do about the income, it is what it is, besides getting a cosigner. But I always do like a friend-to-friend credit check with them, right? I say, okay, the first question I ask them is, tell me, realistically speaking, how much are you comfortable paying a month, right, for the house? If they say, hey, the max I want to pay is $5,000 a month, and if I stay on that budget and there's no DTI issue, then we go from there. But if there's an issue, the number one thing would be liabilities, maybe paying them off, auto loans, maybe tell them, hey, you know what, maybe your mom could refinance that auto loan under her name only, so your credit could be, your income could be free, right? Also, what else can we do? Rapid rescores. Sometimes the client say, hey, I already paid this off. Then we could just call the credit company and say, everything has been paid. Let's do a rapid rescore where I could show my underwriter that everything's paid. And I like to do that before submitting my loan, so then I don't have to source any type of income that they use to pay those monthly expenses. And everything's less of a headache. It's quicker, simpler, and more streamlined. Yes.
Okay, this one we're going to go to Eddie. From your vantage point, what shifts are influencing lending decisions in your local market area right now?
The big thing that we're seeing is that buyers are a little bit more prepared than they were in the last 5 or 6 years. A lot of people that got unfortunately beat up in the housing market when rates were at 2s and 3s, and they weren't ready to try to chase that offer, try to chase that property, are now getting a little bit more prepared, right? They're coming in with stronger income, stronger credit, stronger down payment, whatever it may be. So I'm seeing more wins just across the board, right? It's kind of that perfect storm where we're seeing home prices soften up in general, depending on the area, and then rates have come down from 7s and 8s, right? So I think that's the biggest thing that we're kind of seeing right now. So just having a little bit more buying power and then having less competition. So it's a great time.
I think the rates have definitely improved, which, kind of takes care of the affordability piece, along with, like grants and stuff like that that we already utilize. But that I feel like has been one of the biggest shifts, going from low 8s to high 7s down to like 5.75 approximately, don't put me on that. But yeah, I think that, like Eddie said, buyers are now a lot more prepared because they know what to expect. They've worked on it for a couple of years, and now there's a lot of less competition just because there's a lot of buyers that are still thinking that a 6% rate is high, when in reality that's normal. That's that's a normal rate. Yeah, see? And I don't think they're gonna change. I don't think there's gonna be a huge decrease in rates, if I'm being completely honest. So I think that now buyers are getting a lot more used to the idea that this is where the rate is gonna sit, how much can they afford with this specific rate.
Are you seeing more of an influx of applications?
Yeah. Yeah, especially now that tax season has begun. I have seen a lot more referrals or leads of coming in for, see what they qualify for. So yeah, there has been a lot more traction when it comes to first-time home buyers.
I believe knowledge is power, right? A lot of buyers now, they are aware of how the mortgage process is, what a mortgage is, what the monthly payment could be. I think we are debunking a lot of myths, so applicants are feeling more ready to purchase, and this is thanks to organizations like NHORA. For instance, We host the road home ownerships and all of those things, all the financial education that we're doing across the board. We're actually seeing now the actual results of it, yes. I think affordability, it has been one of the main focus for a lot of buyers. And it is exciting when we see clients that they're willing to do whatever it takes to buy their home, right? And we've seen that more often. Applications, our phones are hot now. Everybody's calling us, so keep on doing that, keep on referring this business. Buyers are excited to buy. Yeah. Like Arjun has said on the calls that we have, housing is always going to be a necessity. And we always deliver that message as well.
In competitive offer situations, what financing elements help position a buyer as low risk to a seller?
Getting fully underwritten up front, right, I think is the biggest thing. Just having that seller feel a little bit more comfortable and confident that the buyer is willing and able, right? They can actually commit to that close of escrow that they have, whether it's 14 days or 30 days, that they're actually able to commit, right? So that's the biggest thing. So we've been able to do too, just kind of give clients one of it, just being creative. Sometimes clients that have money in the stock market, right, have these portfolios, and if they have their accounts managed here by one of our wealth advisors, they can sometimes even get floated in line against their investments, so that way they can have the money ready without having to, pull out of the market and unfortunately pay taxes or miss out on any upside as well. So I think that just shows that the client's able to put a really aggressive offer up front with an aggressive down payment and having a fully underwritten file as well. So I think that's how we've been able to get our deals and just position our clients in a really good winning position.
Same. So having a fully underwritten buyer really does make a lot of difference because they're not, the seller's not questioning on whether or not they can close, because yes, they can close. Of course, unless something comes up with the appraisal or whatnot, but other than that, the loan is already approved. There's nothing, the appraisal would be the only thing that I can see, or a change in income if for whatever reason the buyer loses their job or whatever the case is, but that gives some peace of mind to the seller knowing that their house is going to sell, that loan is going to go through and that buyer is fully committed, so they're not going to last minute back out because they know that they're already fully committed to this.
When we say that we could close something in 7 days and we deliver, that means a lot. It's a small community, so everybody knows how quick or deliberate someone could be, right? We could close transactions in 7 days. That's the soonest that we could do it legally for Bradley and Westwood, because we need to wait 7 days for the loan estimate. But anyways, yes, we could do it closing as quick as 7 days. We work non-stop to make sure that your buyers get the home on the right timeline. And again, we think out of the box. Not every applicant is an FHA applicant. There's a lot of products that we can close as well, sooner and better, and rates for what other people may think that they say, oh my God, this your loan, probably you're going to give me a 90% rate. It is not. It's almost the same as like conventional. So knowledge is definitely power, and that's what we do with clients.
And so we're talking about a competitive offer situation. How important, or do any of you ever or include anything for the offer, or make the phone call to them?
Now the question was, how are we involved when the offers are being submitted? A lot of the agents that I work with, they send really nice emails. They introduce me. I respond right away. I call them and say, hey, John submitted an offer for your property in Hollister at this address. Miguel Santamaria, the mortgage broker working with client, yada, yada, yada. Yes, and everything has been fully underwritten. We could close as long as I get the appraisal, quick as 7 days, insurance, and all of that. Yes, but we have to definitely be involved nowadays. It is competitive out there, so it's not easy. We have to be involved and we need to show the agents that we actually care and value their partnerships.
Are you involved in the offer? How involved are you?
Not with the offer itself, because there's a lot of red tape with us, and we can't. Up until we get the contract and once it's submitted on our end, then yes, we're fully involved because we have to be at that point. And I think it will be a disservice to both the buyer's agent, well, all agents involved and the buyers as well, for us to kind of not keep them in the loop. But yeah, when it comes to the offer itself, as involved as we can be, is submitting, is providing their fully underwritten letter. So yeah, that's pretty much where we have to draw the line before we're fully in contract.
I like to over communicate, so please loop me in when you guys are writing your offers. I like to write the offer jointly. I'm not going to say, hey, take this off and put that on, but if we could shave a couple days off our close our escrow, shave off a couple days on our contingencies, or advise you, hey, this client has been fully underwritten, it gives you the power to be able to write an offer, not contingency. You can never really advise one way or the other, but I do like to get brought into the loop when you're writing that offer. Because if you are writing this close of escrow for 45 days, but this client's fully underwritten, and there's no red tape or there's no red flags there, we might be able to close a lot quicker in 14 to 18 days. So please get me involved. I'd love to see where we could potentially shave off a couple of days or situate the client in a better position that they stand out when we're writing the offer.
Are you asking? Okay, that's what we do. To piggyback off that, Betty, so what's one underwriting, and this will help all of us agents, principle you wish more agents understood when negotiating timelines and contingencies? You don't want to do like 2 days, you know what I mean? Or none.
That's where I mentioned that. Bring me into the loop, right? So you don't put me in a pickle and say, hey, I need an appraisal in 2 days, when the average turnaround time is 14 days in your specific county. For the most part, I feel like here in Monterey County, we have about a 7-day turnaround time. By the day we order it, it's the day it comes back, gets cleared. But if it's a unique, funky property somewhere out in the sticks, then it might take a little bit longer, right? So I think that's the number one thing. Just really get us involved, so that way the left hand knows what the right hand is doing. And then vice versa. If you maybe set something that's a little bit longer, I can let you know real time based on our turnaround times with our underwriting and based on traditional or based on a historical appraisal turnaround times too, what we can do in your specific area or specific county.
As far as like our underwriters, they have specific timelines that they have to follow, and unfortunately a lot of the times, not beneficial to, well, I can't say it's not beneficial, because there is stuff we can do. Like we can always loop in our managers, loop in their underwriting managers, and kind of just create that sense of urgency so that they don't go to the last possible day to go ahead and do a task or get an answer back to you. So yeah, there's a lot of times where underwriters have their own timelines that we can't really do anything about. Besides, try to create a sense of urgency and get them, so we can get our file to the finish line.
I think it's simple. Nowadays, underwriters work on documentation, right? So if we give them the documentation required up front, it's going to be painless. And I always tell them, and I always share with the agents, hey, this is what we need, so I can deliver on what I promised. If you don't give me, well, not them. If the clients don't respond as quick, then that would delay the process. I could create as a loan officer the best telenovela available out there, but if I don't have the documents to back it up, then it's going to be a horror movie. So we need to be communicating and being proactive with each other.
Miguel, we'll start with you. What borrower scenarios are being served by less traditional or specialized loan programs?
That's a great question. Now, as the same way as the real estate market is evolving, the mortgage market, the mortgage market is also evolving. We have a lot of products available out there. Like I mentioned, item loans, they're being big now in this area. That item is for clients that they don't have a social security number, but they've been here, they work, and they file taxes. They can purchase a house. Land loans, we have them available as well. DSCR loans, pretty much every product available out there, I have it, besides mobile homes and a mobile home park. But we are offering creative solutions for unique buyers, and everything's available out there. The DSCR loan is debt servicing ratio loan. It's really important. If someone is buying an investment property, and the property could be rented, let's say, at $3,500 a month, and we get the appraisal back saying that that property could be rented at $3,500 a month, you don't gain. You gain. There's no need for tax returns. We don't care about your income, as long as the property could actually be rented for the no more. Not even nowadays. Before it was, let's say, if the rent is $3,500, your monthly payment cannot exceed $3,500. Nowadays, we have the ACRs below 1%. So even if the property does not appraise, cannot be rented for your monthly payment, we're still in business. You just need to bring a little bit more down payment. Also, I could personally finance for up to 8 units. I don't have to refer it to my commercial department. So up to 8 units, I could buy it for you. The Great for All loans that everybody's talking about, we're having a class this Saturday. Feel free to bring your clients so they can learn how all the down payment assistance programs work. From HFA, the City of Salinas down payment assistance, the county, all of those down payment assistance programs, we're going to be talking about it. So feel free to come in, bring your clients. I will respect that they're your clients, and I will not take them away from you. I trust our relationships. So yeah, a lot of programs available out there. Sorry, I was just venting.
Yeah, we don't really have a traditional besides like NHORA. Our grants that we can utilize with a conventional loan program to kind of structure the deal or structure the file if we have a borrower who is a little bit more limited on funds for closing or funds for down payment, then we can always structure that along with city down payment assistance, or if there's any like employer down payment assistance, any gifts, or like we can always structure a deal. But it as far as non-traditional like DSCR loans and stuff, that's stuff that unfortunately we don't offer. We can always investigate. Yeah. So yeah, I mean it's not a 100% program. No, we don't. We do not have 100% besides VA, right? Because there's no down payment required. We as of right now, we only have our closing cost grant and our down payment assistance that we can leverage to make, if the client is a little more reserved or make the file stronger, or offer stronger, then yeah, those are extra funds that they're able to use, and they do not have to give you feedback. It's free money.
The biggest thing right now in this market is I think that's a little bit non-traditional. Is if somebody's selling a property to get into that next property, as soon as their department residence is in contract with no contingencies or position been removed, we can actually exclude them from the debt to income ratio. So that way your client doesn't have to hold 2 mortgages to qualify, which I know is kind of a pain point for a lot of folks that need to sell to get into the next property. The other thing too is, like I mentioned, my partnership with our WIM, our wealth advisors, they're able to sometimes float lines to clients to be able to just build liquidity without having to necessarily sell out of their assets. And that doesn't count towards their debt to income ratio since they're borrowing against their own funds, which is great. Another thing too is that I have that $10,000 grant, home buyer access grant, that both your buyers and sellers can take advantage of. It doesn't have to be repaid back, and we can get into the weeds a little bit more one-on-one, but just kind of the skinny does have to be primary residence. That property or subject property has to qualify. So if you do have any upcoming listings or any properties that your clients are looking to purchase, let me know. I can always run my engine and see if it's something that qualifies. And then the income limit just got bumped up. It's at $313,000. So as long as the clients make under $313,000, then I think they would qualify for that $10,000 grant. And if your clients are on that cusp because they have bonuses, commission, overtime, things like that, or stock units, I can exclude that income to help them qualify for the grant. So I've been able to play around with the numbers a little bit to make it work out and not use things we don't need. On top of that, the only other thing I can think of is we have a closing cost credit, $5,000, and that one is a little bit more specific to the program itself. It's a 93%, up to 93% loan to value, or 97%, sorry, loan to value, conventional, and it doesn't have to be paid back either, but the income limit on that one's about $115,000, but it depends on each county.
they be self-employed?
Yes, they can be self-employed as well.
Great questions. Hope you guys got a lot of information. You're taking all your notes. Anybody have any questions that they would like to ask any of our panelists? No? Oh, we got a question. John?
Does your,
No, that's not John. I don't know.
does your physician program do 100% financing? Up to 800,000?
Our physician program?
Yes. Which includes dentists, veterinarians.
Yeah.
It does, right?
Thank you for the reminder, Juan. Yes, so we do have physicians programs, and yes, it is. So also, they don't have to be already started on the job. As long as they have an offer letter, then we can go ahead and use that. And their education time is their work experience. So they don't have to have, they don't have to be a physician for 2 years. We are still able to do 100% financing.
Or just physician?
I know there's remind me, Juan, because I know there's a specific one that I think chiropractors were not able to do, right?
We have a list. I'm not sure if chiropractors could do that, but I know we had veterinarians, and pretty much anybody that is an MD or doctor per se
Yeah.
will qualify.
And MD, doctors, DO, I know we are able to.
Psychologists.
Psychologists, yeah, ortho, dentist.
We also have a doctor 100% financing. The good thing about this is that there's no income limits. So sometimes the physicians could have a high income with this program. There's no income limits, 100% financing. Every doctor besides a chiropractic, that's with us. A chiropractic is not part of that. And also, like I said before, the 0% DSCR, so that's for investors. We have a lot of clients that they purchase investment properties, so the property does not have to DSCR any longer. We can go down to 0%. Okay.
How about safety, like police officers and fire? Is there any special loans that you do?
In my case, there's some wholesale lenders that they offer down payment assistance for teachers, nurses, and someone else. Yes, but there's options available, also up to 100% financing. Some of them, depending on their credit score and other stuff, some of them offer a loan where you have to pay back. Other lenders is 100% financing.
I have a program that's kind of similar as well. It's not necessarily tailored specifically for professionals, but I have an 89.99% jumbo program with no PMI. So this can be a lot of your professionals that maybe just got into the field, don't have a lot of down payment or assets, but you can get in with 10.1% down and be able to not have PMI and get up to a loan above $806,000. And it only needs 12 months worth of reserves. The rate is going to be a little bit higher, but it gets somebody in. So your doctors, your lawyers, your attorneys, medical professionals, of course, first responders as well, nurses, things like that could qualify for this. So I have used that in the past to be able to get clients in. They're going to be making strong income, but we don't have the assets right now.
Yeah, this question is for Miguel. Do you offer lending outside of California?
I do. We have, I could finance on a lot of states. We have a list where I could personally, my wholesale lenders not able to finance. I know, for instance, Arizona, it's not on the list, but I know Texas, we could lend in Texas and other states, New York, New Jersey. I would have to check on the list, to be honest with you. But yes, we have, and I could actually do the loan here in the office. I don't have to refer it to someone else. We do have financing available in other states.
Thank you. Well, I want to thank our panelists. Can we give a round of applause? I know everybody has a busy day, and we're hoping that the rain dries up now. So thank you so much. I'm going to hand this over to Jorge.
Well, thank you guys, ladies. Awesome. Well, I'm glad that we're able to really showcase our annual sponsors because they are a big part of NHORA Monterey County. And besides the money that they give us their time. And I know all three of you are on boards. Miguel Santamaria was our founding president here in Monterey County. I know Gloria is on our current board, and I know Eddie has been on many boards, and so he's, they're all a great part of NHORA as a whole. There we go. Well, thank you all for joining us today. We are going to have a mixer in March. It's to be determined what date, but we are going to do it in Casa Sorrento in Salinas, so we will keep you all posted.